guys, and thanks for tuning in to another edition of Kip's Tips. In today's video, I want to talk a little bit about the credit score. So what is a credit score? Well, everybody's got one, and it could be in the 400s, it could be 850 at best. And why do I need a credit score? What the heck is a credit score? Well, a credit score is basically a record of your financial history on how are you doing with payments. How are you doing on paying down any of the debts that you got out there? If you got a car loan, if you have credit cards, if you have a mortgage, how are you doing? Are you keeping up with your payments? Are you paying them down? So how do I get a good credit score? Well, just like I said, if you get a car loan or you get a mortgage or you get some credit cards and over time you pay those off, on time, every time, then over the course of time, you will build a high credit score. Right now, I'll just tell you, I've got a credit score of 777, which is pretty good. I feel pretty good about that. But I'm a guy that's like, I've always been like this, where I'm notorious and I have to pay off my credit card as soon as I have the cash. So if I've got, basically, I'll go out to a dinner with my girlfriend, and once that dinner rings up on my bill and I see it on my credit card payment in the Chase app, I just go, oh, I'm paying it off, so I'll just pay it off from my checking account and I'll square it away, because I don't want to just ring up a bunch of credit and then overspend on my credit card and not have enough cash. By watching my credit card and making sure that I'm paying it down as often as possible, I'm making sure that I'm not running out of cash, because I always pay it instantly. And for me, early payments, and for all you guys out there, if you do early payments, it'll help your credit score. So that's one thing. There's also another thing that you got to take into consideration when you're trying to improve or better your credit score, and that is the ratio that you actually are ringing up on your credit. So like, let's say you have a $10,000 credit limit, and for that month you ring up $2,000 and then you pay it off. That would be 20% of your credit limit. So lenders really would like to see about a 30% maximum credit limit, and in terms of the ratio that you're going to be utilizing of your total credit line. And people that consistently have a lower credit percentage, then those people are going to be favored more, and they're going to get a better credit score, and they're going to get preferred rates when it comes to interest rates when they're trying to borrow money from the bank. And that's really important. So one thing that I'm trying to do, and we've talked about this, is I'm trying to get a building. I want to get a unit, and I want to start being a landlord. I want to start doing renting. And some of you out there might be a realtor. Maybe you're already doing it. That's what I want to do. And in order to do that, you got to have a good credit history, because if you're trying to enter into a 15 or a 30-year mortgage, you're going to want to make sure that you are getting a good interest rate. And what's the best way that you can do that? Well, you could co-sign with your parents if you wanted to and use their credit score if they have a good credit score. Or if you built up your credit score over time by doing a car payment, paying for your credit cards, paying all your bills on time, then you could qualify for the preferred interest rates. 760 is really kind of anything above 760, you'll get the best interest rates. So if you get a credit score that's under 760, you still get a pretty good interest rate if you're close to that, but it's not going to be as good, most likely, unless you're above 760. If you have an 850 credit score, it really doesn't mean that much more for you, except you could brag about your credit score, but like, that's weird. So if you had a credit score that's really low though, and you're down in the 400s, 500s, you might not even get a loan. And if you do get a loan and maybe you're sitting around 600 or something, it's not going to be at a preferred rate. You're better off having a 760 points credit score as opposed to a 600 points credit score. But I think that goes without saying. And your credit score is something that sticks with you your entire life. And that is something that it's not something you think about. It's not very exciting, but it's good if you do have a credit card or a car payment that you're just paying those things off and you're finding those opportunities to gain yourself some credit, which is one of the advantages of moving out on your own. Some of you people who are living with your parents, if you're not paying down your utilities and your gas bill, and let's say you don't even have a car payment, then you're not going to have as many opportunities to build credit. But that's okay, because it's absolutely not too late. If you ever move out and you want to pay your utilities down, that'll help towards your credit. If you want to pay your rent, your car payments, your mortgage one day, that'll all help you. And the best part is you can change it you can change your credit score. It's with you forever, but it changes too. Every 7 years, it really doesn't hold more than 7 years worth of financial data. The exception is if you go bankrupt and you go severely bankrupt, they might actually reflect that on your credit score for up to 10 years. So don't go bankrupt, guys. I hope I don't have to tell you that, but just don't go bankrupt, because we budget and we save money and we have an emergency fund and we do all the cool things that we talk about in Kip's Tips. Make sure you subscribe, because we're going to keep coming with more tips. But guys, just make sure you're not overspending, and make sure that you're building yourself some credit so that as your life starts to progress and you start to want to do things like get preferred interest rates on a new car or on a mortgage, that you're able to do so. It's so weird that we live in a world where, the saying, you got to spend money to make money. It's so true, and it's so sad, to be honest with you. But that's the whole point of this channel, is I want to help people leverage their opportunity, and by A, utilizing their youth, getting time on their side, and then B, getting the knowledge to utilize that youth and investing to make sure that you're setting yourself up for the future by budgeting properly, getting all the savings in place, and making sure you got a good credit score so you can lead that life that you really want to live. I'm really looking forward to hopefully getting a mortgage here and getting a property within the next 2 years. As you guys know, right now, one of my biggest hurdles is getting the down payment, but that's something I'm just going to chip away every day. I'm going to pay off my bills as they come along. I'm going to follow my budget, and I'm going to make sure that every day I'm stowing aside some money, whether I have it in a conservative investment or I have it in actual cash. I want to make sure that I'm getting up the funds that I need to do the next move. Don't let your credit score hold you back, guys. Make sure that you're thinking of different ways that you can start taking on and improving your credit score. Now, one thing that I want to say too is, this doesn't mean go sign up for a bunch of credit cards and get a bunch of debts that you can't afford. I'm not telling you to go out and take a bunch of debts on. One thing that I do need to point out about the credit score is that if you actually cancel a credit card, that can negatively affect your credit score. So if you got a credit card that's open right now, maybe you want to keep that open. Maybe you want to do a little charge every now and again, because if you don't spend the minimum sometimes on your cards, you got to make sure you look at your terms. They might charge you a fee. Maybe you don't have to spend anything, but just don't close it, because then you might have a negative impact on your credit score. Now, if you really want to get rid of it and you got a high credit score, maybe you could do that, because at that point, who cares? You already got a really high credit score. But you don't want to negatively affect your credit score accidentally. I had a friend that did that, and he was like, and it didn't really affect him because he wasn't utilizing his credit score for anything really at the time. But it's not a good thing to do, and it's something to be aware of, because I want you guys to understand what it takes to raise your credit score and what it takes to lower it. To raise it, you just got to make your payments on time. You got to be financially responsible anytime you're borrowing money from somebody, especially legally on paper and in a loan form. Then you got to pay that thing back on time. If you're not paying and you're not doing a good job and getting your payments in on time, or you're short, then your credit score will go down. It's pretty straightforward, but it is pretty important. That's all I got for you guys here today. I just wanted to talk a little bit about credit scores and the importance of them, and what you guys need to do in order to raise it or build it up even further than it's ever been before. Thanks, guys. Thanks for stopping into another edition of Kip's Tips. Make sure you leave any comments below. Leave me with any questions that you might have. I want to make sure that I'm answering all your questions. Have a great night.